Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Wednesday, February 15th, 2023. Before I take a look at all the charts, I just want to encourage you to please click like if you would each and every time you watch the Apple report. It helps us out a great deal. Also, subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded. That includes the daily Apple and daily Tesla report. Share the content if you would with friends and colleagues. That helps us out a great deal as well. You might check out Wicked Stocks as well. We have a basic subscription package that includes the daily Triple Q, the daily SPY report, the weekly S&P 500 index, the weekly NASDAQ 100 index, the weekly TLT, that is the long treasury bond ETF. We also do 2 stock picks a week. Last week was Google and Microsoft. Just today, I'm talking now, Tuesday, the day before Wednesday. On Tuesday, we put out a decent 10-minute video on applied materials. It's testing a very important area right now. So there's that. Anyway, here is the big picture. I like to work with the big picture and then work our way into the near term, the day itself. We came off of long-term support in early January that was targeted following an October sign of weakness. The lower 120s remain a significant zone of long-term support following this test. We mentioned how the low 170s could be considered a target in reach as we move into later 23. And we're about 2/3 of the way there already with this incredible rally. On the way up, a few weeks ago, we pushed into and ultimately settled above this zone, a band of support now between 139.04 and 143.78. Both are meaningful long-term trend identifying line studies. 139.04 is a long-term descending 1/3 speed line. We closed above it about 3 weeks ago. And about a week later, we closed above this equally significant 143.78 channel top. That event, the settlement above 143.78, indicated a 2 to 3 month rally, 3 to 5 months possibly, to the 172.99 channel top, where we just might place an annual high. So here we are. Now, on a day-by-day basis, it has really sort of been an intense amount of finessing over the last few days as we've opened 2 days in a row below this combination channel bottom speed line area, and that's at 154.37 to 154.64. Now, we did close just below it on Tuesday. 153.20 was the settlement, and the line study was at 153.30. Pretty darn close. I will say 154.26 takes on added meaning today. That is nothing more than a short-term descending channel top. So everything comes together here in the support resistance, in the support and resistance area between 154.26 and 154.64. This is a zone, assuming we open below it, that just might contain buying through next week. And from here, we could fall off. I do, after testing this area, want to see another lower settlement on the day. That would sort of tip this market more aggressively, if you will, into the bearish column as we move into later week and next. But if we continue closing, as we did by a hair on Tuesday below these line studies, I'd like to actually see a lower settlement on the day, to be quite frank. I don't have a number in mind, but yesterday's was around 153.20. If we close lower than that and clearly below this area, it tells me the market can develop selling pressures as we move into later February. So I will go with holding below 154.26, maintains a 139.29 2 to 3 week downside objective. But it is so close, we can quite easily push through, even open above this 154.64 area. And if we do, 157.50 is actually in reach today, which is, I can point it out, is this high back in late October. 157.50 in reach today if we happen to push or open today above the 154.64 area. And then closing above all this, and it's all noted here, 154.26 to 154.64, closing above all this does then signal the lower 160s over the next 1 to 2 weeks. And this is a meaningful resistance area as well. It is kind of step by step, It is stair-step on the way up right now. Keep in mind, though, holding above the 139.04 to 143.78 area does maintain a 3 to 5 month objective in the lower 170s. And so closing today above 154.64, this 160.49 to 160.95 region is then likely, possibly by the end of next week. And that is a combination 5/8 upside Fibonacci, AB all-time high against the January low, as well as a descending 2/3 speed line over the same time frame. This area should be respected for containing its ability to contain weekly buying pressures. Possibly into later March, we could fall off from here. So for those of you who like to play the 2 to 3, 3 to 5 week time horizon, I don't want to say that you have my blessing, but you could certainly consider setting a short, whatever that means to you, in the low 160s. Anticipating perhaps the low 150s within a week or two, potentially the lower 140s within 3 to 5 weeks of testing the low 160s. That's why I hold to more of a 2 to 3, 3 to 5 month target at 172.90. And last thing I'll say about the upside, if over the next couple of weeks we happen to close above 160.95, we're just another 2 to 3 weeks away from reaching 172.99, which is a significant overhead resistance area for Apple as we move into later year. It could contain not only quarterly, but perhaps annual buying pressures, and we could fall off from here into later year. And finally, it would be a settlement above 172.99 that would signal the resumption of a long-term bull market. This is sort of a consolidative framework that you can see here following the November high. There is a lower low, lower high dynamic by just a hair. And if we close above 172.99, that is all done with. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's talk downside today. If we happen to close lower on the day, as I say, merely closing below 154.26 will invite sellers as we move into later week and next. On the way down today, I don't have it labeled again. I don't expect to see it, but it is possible that we may test the low of the high from about a week and a half, 2 weeks ago of 147.83. That would probably be it to the downside. We could call that a session containment level. So for you day traders, you could play the short side in the 154 handle, 154.26 to 154.64, and liquidate that short position, cover that short position at 147.83. But for those of you who are 3 to 5 day swing traders, 2 to 3 week position traders, you can ever so gingerly set a short position. I say gingerly because the sell signal is so close by a hair. It really only occurred on Tuesday's close, and by a dime, literally. So I just want you to be careful, but just know that if we have unable to get up and over the 154 handle resistance and we close negative on the day, that in itself could be your cue for 143.78 by the end of next week, which is once again the long-term channel top coming down that can contain, I have daily selling pressures here, and I'll tell you why. And that is because the idea that I have that I think is legitimate is that if you close below the rising 1/3 speed line, which today is at 154.37, and we did by a hair on Tuesday, and if we continue to do so, then the rising 2/3 speed line becomes your objective, which is presently 139.29 and climbing into the lower 140s next week. And so what I'm showing here is 139.29, you look in the lower right here, is actually converging presently, and I don't show it on the chart, but it is converging presently with this 139.04 long-term descending speed line. And then as we move into later next week, it will converge with this longer-term channel top at 143.78. So this rising speed line I'm going to choose this image actually at 139.29 as it rises and then converges with the long-term channel top later next week. We'll take on added meeting 143.78 in combination with that rising speed line will once again become a 4-star support, able to absorb selling on a monthly basis. And in fact, I think you can just say that if we were to break into this zone, and I don't see it anytime soon, and by that I mean within the week, but perhaps over the next few weeks, if we break into this zone, this presents a decent buy opportunity as we move through the second quarter, and we can come off this area as we move into Q2, Q3. And finally, it would only be a settlement back below 139.04 that would tell me that Apple is likely to fall back into the low 120s over the following weeks to come, where we could place an annual low. And that is really all I've got to say today. Please click like and subscribe. Check out wickedstocks.com. I'll be back tomorrow, of course, with Thursday's Apple Report, and you have a great evening.